So pleased to have Tokunboh Ishmael here with us today. I mean, you are a pioneer in this industry. So many great achievements, already over your career. Just to give our audience a bit of an idea, in 2013 you became a Yale World Fellow. You serve on a number of boards, including the First City Monument Bank. You're a non-executive director at Pagatech. And now you're also the chair at the African Venture Capital Association, AVCA. And of course, most people know you and probably dearest to your heart as being the co-founder and managing director of the now infamous Alatia Capital, an investment management and advisory firm, amongst the sort of the many things that that you do on a day-to-day basis. So great that you're with us today. But maybe just to kick us off, this past year, we're on track to break $3 billion in funding into African VC. Does this surprise you at all?
No, it doesn't, is the short answer. We saw it coming. I mean, already last year, over 55% of the transactions that we tracked at AVCA were tech-enabled transactions. Most of the money that was coming in from jurisdictions other than Europe and from non-DFIs was coming from the US, and that was via venture capital and impact investing, to be honest. And so it doesn't surprise us that we're at this stage. Also, it doesn't surprise us because obviously for the longest time, we've thought that we needed good stories coming out of Africa to attract more funding. And those good stories have been coming fast and furious this past year. So no, not surprised, very pleased.
I remember, I think it was in 2009 in Dakar, Senegal, we had the African Venture Capital Association meeting. And at that time, it was my first meeting. Pretty much, everything was 100% private equity. There was no VC, there was no venture capital industry. Since sort of being involved, from the very beginning, how have you seen the industry changing? Well, what are some of the big trends that you see shaping the space?
Well, like I've just mentioned, a more diversified investor base, or should I say, a more diversified foreign investor base beyond development finance institutions, which has clearly helped to show the commercial opportunity. We've also seen accelerated innovation in some key sectors. For my firm, Alatia Capital, inclusion, access, affordability has always been at the forefront of our strategies. And technology has always had to play a role, as far as we were concerned, in making that access possible. So we've obviously, and everybody knows this, we've seen more tech enabling and digital transformations. And we've gone from where, for example, we've had pure fintech, which, as you know, fintech is the largest sector that has attracted capital to date within the tech-enabled strategies. We've gone from the pure fintech to the more embedded fintechs, embedded finance, and really having tech permeate all the essential sectors that we've followed. So those are the kind of trends we've seen. But we've also seen families of entrepreneurs being founded, having worked together in some of the initial companies that we all know of and sort of are now household names today. Need I reel off the list? But we're seeing that kind of alumni begin to also create a whole ecosystem around new opportunities and new investor bases, to be honest, because some of those initial founders are also raising funds at the moment. Mm-hmm, mm-hmm.
In your opinion, does the sector now get the attention that it deserves? Is it getting the attention from enough attention from foreign investors, and how about locally within the continent? I know for you have been hammering on the pension fund story for a long time. Are we making progress? What's happening?
So so there are two sides to that, to a response on that question. So the first side is that, well, it's certainly getting more attention, from certain investors in the US. And those are still in the VC space. And so in terms of channeling investments onto the continent, we're still more heavily focused within the development finance institutions, to be honest, as the sources of capital. So there's still some commercial capital that really hasn't looked outside. I mean, you mentioned the 33 billion at the beginning of this conversation. That's still a drop within the aspect of total funds available globally, right? And so we're seeing some of that attention, but we still need to tap into the more commercial capital. And I think that will come, especially as we're seeing some of the African stories who are accessing New York Stock Exchange or even London Stock Exchange. You're seeing some of these companies beginning to rear their heads and get some attraction. So that will come over time, but there's still a ways for that. Domestic capital is the big gap, like you rightly mentioned. We still don't have enough domestic capital coming to the table. And what we're seeing with respect to domestic capital is some sort of knee-jerk because of all the good stories that fintech and tech in general have brought to the fore. We're seeing more domestic capital begin to say, oh, look, there's something to be done here. And you're seeing lots of local angel networks spring up on the continent, and you're seeing some of the domestic capital, much more of it, beginning to think more along tech when they're thinking along investments, which is great for VC, but I think we need that along the whole spectrum, because as VC matures, as venture-backed companies mature, you want to have the larger fund managers also have more of a focus within this sector. And so there needs to be the chain of that. And I think we need to develop the local capital markets as well. We need to see more of that finance come locally to provide the confidence, but also the robustness that those companies can begin to provide in their economies. And also for the development of those economies, and to leverage the whole Africa Continental Free Trade Agreement, what better partners to have than also the domestic funders that can provide that backbone within the economies.
I mean, you're having a lot of these conversations, so they respond enthusiastically in the beginning. Does it? Where does it? Maybe where does it not happen? So
there are some positive responses. We need to see more, and some of that is to do with the inherent structure of how those funding sources, those sectors are based. So VC and private equity is still seen as a black box, right? And you put your money in, and you get some reports quarterly, sometimes semi-annually, and it's not frequent enough for the kinds of changes that some of these pension funds and insurance companies have. So they haven't quite gotten to that kind of same shift in mindset. So there's still some education to be done, and still some education that's going on. And then also, when you layer on that sort of their regulations and what they're allowed to do, there's a lot of education that we as an association, AVCA, is partnering with some of the regional associations like PEVCA and SAFCA and EVCA to talk to regulators about how you can make the environment a better place, a more attractive place for not just international investors, but also making it possible for more domestic capital to come into the space.
Yeah, I mean, I also want to congratulate you on, being now the chair of the African Venture Capital Association. If I might say myself, it's always exciting when family of the ACES community go to take on these bigger issues and these bigger roles, beyond the investing work that they do, which already consumes so much time and so much energy. But now being the chair at AVCA, what are maybe some of the things that you're campaigning for? What are the things that you would like to see the industry achieve in the next period?
So a big one is advocacy. So advocacy with respect to what I've just spoken about in terms of the right environment to attract both foreign and local capital, advocacy for regulation beyond what I've spoken about with respect to the structure of those asset managers, but also in terms of regulation around fees that need to be paid on particular transactions and licensing in our local environment. We're seeing some of our geographies in West Africa and other parts where fund managers are finding that they're paying, over 10 times the kinds of fees that they would pay for the same kind of transaction in other jurisdictions. And then that may make that transaction unattractive. And so how do you help the regulators see the benefit of funding these companies that become the engines of the economies without strangling those sources of finance? So we're working a lot on advocacy in that area. Also research, we can now point to more research that helps us in this advocacy about best practices from around the world, also about the trends and the impact that our investments are making. Because one thing we don't talk enough of within the VC and private equity world is the kind of impact that we're having on essential infrastructure and essential services, and how that impact actually trickles down into the lives of ordinary folk. And when the lives of ordinary folk are lifted and they reach their full potential, that's how the continent and the countries and economies can reach their potential. So really, that kind of advocacy and research and publicity around the work that we do, I think is extremely important. So for example, of the transactions that were done in 2020, over 60% of those transactions involved investments in essential infrastructure, whether that's with digital infrastructure, whether that's making it more possible for more people to have access to affordable health or education or financial services. Those are the kinds of transactions that we're seeing at the heart of the trend of investments that are being made. And those are the transactions that are making it possible for people to live better lives. And we need to speak more about that.
Yeah. In the beginning, they said, are there opportunities, right? And then they said, well, do we have entrepreneurs on the continent who are there to develop these opportunities? And then the question was, well, are there investors willing to put money into these opportunities? And then the question was, well, are we actually going to see, some kind of acquisitions or, so these things have all happened. Is it fair to say that now also getting companies to list publicly, that is going to be sort of the next milestone for the industry? I know you've done some work, listing, I think, the first Nigerian company on the Johannesburg Stock Exchange. Just, very quickly wanted to get your view on this.
Yeah, so that was a long time ago now, over 10 years, maybe even 13, that we had that dual listing. And we really felt that there was going to be quite a few companies following in that footstep. That hasn't happened as much as we thought. The door hasn't been pushed down on that. And I feel that part of that is, again, being able to have domestic capital rally behind some of these transactions so that we do have the robust capital markets that need to come into that. And so we still need to develop the capital markets that lay down that path and the smooth road for companies to walk that journey towards the listing. I think that there's still a gap between companies being funded and the depth of the capital markets. So there's still some work to be done there. But also within the companies, also making sure that we as VC and private equity practitioners remember that part of the work that we bring is beyond finance. It's also about developing the corporate governance of these companies and strengthening them to be in a position where they can sustain their listing when they are subject to the kind of scrutiny that they are subject to once they list. And so making sure that the companies and their business models and the corporate governance are robust is part of the work that we do.
Right, right. We're already out of time, and I wish I could just keep talking to you for another hour, 2 hours. But just in closing, I want to give you a chance, maybe just, sort of looking at this next phase of growth and development for the industry. What are maybe, sort of the 3, 4, hot button issues that you think we have to get this right? And then in closing also, what keeps you doing what you're doing, right? Why are you so excited about the industry?
Yeah, so some of the things that I feel need to continue and we really need to lay emphasis on is, with COVID, there was a renewed focus on that which matters. And I think that as we emerge or come out into a world where we learn to coexist with COVID, we don't lose sight of that mainstreaming of that which matters and a mainstreaming of that through impact and ESG strategies. I think that needs to remain at the forefront. And as we've seen from COVID as well, we need to continue to prioritize the digital backbone infrastructure, because the benefits of what we're seeing with tech investing are going to ride on the back of a robust infrastructure. If people don't have access, then we're all just smoking pipe dreams. Something that's near and dear to my heart is ensuring that we do not let half of Africa's golden assets go to waste. And what do I mean by that? For me, I say it and I repeat it here, the most underutilized asset on the African continent is women. I would like us to continue to see more funding go to female-founded businesses, and also businesses that have an impact on women in general. What do I mean by that? Impact on those sectors that are the largest employers of women. We see that with agriculture. Impact on the environment in which women are working. Impact on the kinds of innovation that go into ensuring that women have access to the kinds of products and services that make it possible for them to reach their full potential. Education for girls, so access to good quality education for everybody, but specifically ensuring that funding goes to women. And that's why our latest fund at Alethea Capital is the Alethea IDF Fund, which is a gender smart fund, which seeks to really intentionally and purposely make sure money goes to these female founders and to these companies that are ensuring that women are able to live their best lives and reach their full potential. Because when we fully utilize all our assets, that's when the continent is going to reach its full potential.
I couldn't agree more. And what gets me so excited about this industry is people like you, people who are picking up these challenges and taking them head on with the mindset, let's get the job done. So congratulations on all the work that you've been doing. Thank you for joining us at ACES, and I look forward to connecting in person again as soon as reasonable and possible.
Thank you so much for having me. It's been a pleasure.